Every year, the global diaspora injects billions into remittance corridors to support home economies. But instead of accumulating wealth, this liquidity functions as a one-way transfer. Value leaves the sender, arrives at the destination, and stops working for the original creator. A cross-border transfer moves along a linear path, where currency conversion, processing, and delivery nodes routinely strip 10% of the total volume. These legacy routing layers act as friction points. Intermediaries absorb capital momentum, creating a continuous leak. This is not a malfunction. Traditional banking architecture is explicitly built for linear capital extraction. It processes transactions without facilitating asset accumulation for the user. Fixing this structural leak involves an architectural pivot to reverse capital migration. It is the technical process of converting a standard cross-border transaction into a direct equity investment at the destination. 3 pillars enable this: AI-driven risk assessment, hard asset tokenization, and a decentralized ecosystem. Capturing diaspora wealth requires a shift in engineering, moving away from viewing money movement as an expense and toward treating every transfer as an asset generation event. The first challenge is evaluation. Traditional credit scoring systems are domestic and cannot assess financial output across borders. Because legacy data is siloed, it fails to measure the economic velocity of a diaspora worker. We require a new evaluation layer. This wireframe represents the Sigma score, a proprietary AI-powered risk assessment engine built to analyze high-frequency transactional data. The model begins by tracking longitudinal remittance history to establish a baseline of consistent liquidity generation. It then cross-references this history with real-time market trend analysis in the destination country receiving the funds. Finally, it integrates current valuations for hard physical assets within those specific frontier markets. By analyzing these 3 streams simultaneously, the AI computes a dynamic, borderless financial identity for the user. This calculation identifies future investment potential, rather than merely verifying the past liquidity needed to approve debt. The Sigma score resets the user's starting position, upgrading them from a passive consumer into a globally recognized qualified investor. Once potential is verified, the next step is mechanical. How does the transferred capital become an actual investment? This requires a conversion layer executed through a real-world asset, or RWA, tokenization framework. Here, the inbound capital is intercepted and converted into units called exodus bricks. These bricks represent fractionalized, tokenized shares of physical infrastructure in frontier markets. The capital is tied to tangible structures, such as student housing complexes designed to serve local population growth. It is important to note the constraints. There is zero leverage applied to these assets. The system does not use traditional fractional reserve lending or rehypothecate funds to manufacture yield. Every exodus brick is backed by 100% pure invested capital secured by a hard physical asset. Directing liquidity into verifiable, debt-free RWAs ensures that diaspora money is physically rooted in the home economy. Scaling these physical holdings requires a macro architecture to manage the network. This is the role of the Sigma BankAI VASP ecosystem. This environment functions as an offshore digital neobank, bridging decentralized finance architecture with traditional regulatory compliance. The mesh is unified by Alkoin, the native utility token and protocol. Alkoin acts as a frictionless cross-border routing mechanism and an immutable ledger for recording RWA ownership. This ecosystem changes the technical role of the individual user. The user's digital wallet functions as an active, operational node on the network. These nodes are tasked with validating the Alkoin network. By providing this validation, nodes capture the yield generated by the tokenized real-world assets held within the system. This bypasses traditional banking intermediaries, allowing for direct peer-to-asset connectivity. Within this ecosystem, the act of participating in global remittance builds personal, yield-bearing network ownership. This comparison shows the transition from a linear, decaying fee model to a closed-loop network of AI evaluation and asset tokenization. This architecture replaces legacy corridors with a more efficient financial primitive. To scale the system, we utilize freemium, zero-fee remittances as an onboarding funnel. By removing transaction costs, the network aggregates the user volume necessary to operate as a full-scale virtual asset service provider. The operational logic of this ecosystem is defined by the POISE framework: pride, ownership, integrity, service, and enterprise. These 5 pillars dictate how intelligence is deployed and how network ownership is structured. The era of one-way capital extraction is being replaced by a model of recursive equity. The objective is clear: plug into the engine, power the network as a node, and secure verifiable ownership of your financial future.